While tariffs and recession fears send markets into extreme fear, Tesla and NVIDIA's dramatic pullback might be the manufactured opportunity smart money is quietly accumulating. Felix here and Winston's roaming around somewhere, and look, we've spent the last 72 hours analyzing something rather peculiar. Tesla has dropped over 50% from its all-time high, and NVIDIA is facing serious margin compression concerns. But what if this isn't some random market behavior? What if this is intentional? For those short on time, here is the essence. I think both Tesla and NVIDIA are potentially positioned for explosive growth despite their current challenges. With Tesla's Robo-Taxi revolution capable of generating $30,000 to $50,000 per car annually in profit, and NVIDIA expanding well beyond its hyperscaler dependency. And you know, back when I was sitting on a trading floor inside of a bank, we had a saying, manufactured chaos creates the greatest opportunities. And that's exactly what we might be seeing right now. Right now, both stocks are trading at what my analysis suggests is a 30 to 40% discount to their intrinsic value. And I should of course mention that Winston, my golden retriever, actually did all the intrinsic value calculations, so take them with a pinch of golden retriever fluff, although he does have a pretty good nose for doing some research. And in my 13 years or so in the market, I've discovered that spotting these manufactured downturns before the rebound is often where the real wealth is created. And that reminds me, if you want to learn how to spot stock breakouts before they happen, and I know right now I'm no one thinking about stock breakouts even, but they are going to come back, trust me. And you are going to be kicking yourself if you miss those great big juicy opportunities that come out of every dip or crash or whatever you want to call it. And I want you to be insanely well prepared, where you know exactly what to do and when this market recovers, and set yourself up right now. So this is the moment, this is the winter where we learn and prepare. Spring's about to come when we start putting the seeds in the ground, and only then do we have a glorious summer. If you just do nothing right now, spring won't come because you're not planting the seeds, and in the summer, well, you're just going to get sunburn. So if you want to learn where to put those seeds and how to put them down, then I've recorded for you a 15-minute masterclass. It's a combination of everything that I've learned as a banker and as a trader. The same strategies have helped me achieve financial freedom. And in this masterclass, I'm going to reveal the simple 3-part protocol that I use to consistently outperform the market, even in crazy times like this. And I know that sounds almost too good to be true, and most people won't watch it and continue to struggle, but you don't need any experience. It's completely free of charge, and it's just simply part of my mission to make 1 million people financially free. That's really the goal of this whole community here. Otherwise, I'd be doing something else with my retirement, but I'm absolutely loving it because you guys are so generous and you guys are doing so incredibly well. So amazing. Go watch the masterclass now. Let's head back to NVIDIA and so far here. Tesla even. My brain going off on one. We're going to uncover here what billionaire investor Ron Barron called an intentional downturn, and why I agree this creates a massive opportunity in these two stocks that most investors are completely missing amongst all the fear. And frankly, what I'm about to show you contradicts most of what you are hearing from mainstream financial media. So what's Wall Street really saying about Tesla and NVIDIA right now? Well, frankly, it's pretty grim. Tesla down over 50% from its all-time highs and just had its worst trading day since 2020. The narrative, EV demand is slowing, price cuts are destroying margins, and full self-driving, well, you've heard that promise before, right? And when was the last time you actually saw a car driving itself down your street? That's the way Wall Street's looking at this. NVIDIA isn't faring much better in the eyes of analysis. There's a constant chatter about margin compression and how the big tech giants, you know, the Amazons, the Googles, the Microsofts, are developing their own chips. And the fear is that NVIDIA's golden goose might be cooked. Why? With hyperscalers becoming less dependent on NVIDIA GPUs. And of course, this is all happening against the backdrop of recession fears, tariff concerns, general economic activity and anxiety, and so it's not pretty. But what if I told you this might all be part of a plan? Here is where things get really interesting. I was watching an interview with Ron Barron, you know, the chairman of Barron Capital, who manages about 40 billion in assets, and he said something that made me pause.
I think they're intentional. I think that the government, you got Musk, incredibly consequential person, advising the president. And I think that all the things they say that make the market go up or down, you shouldn't think that those are by miscommunication or error. They're all intentional.
Wait a minute. An intentional market downturn? That sounds like a conspiracy theory, doesn't it? But Barron isn't some random bloke on the internet. He's one of the most successful investors of our time. So let me explain with a simple analogy. Think of the economy as a pot of water on the stove. Sometimes it starts boiling over. That's inflation running hot. The Fed is like the chef managing that pot. Now, a chef has several ways to stop the pot from boiling over. They can turn down the heat, that's raising interest rates, but they can also briefly lift the lid to release some of the pressure. And that's what Barron seems to be suggesting is happening right now. This controlled cooling happens through 4 main mechanisms. And once you understand those 4, you'll be smarter and better informed than 99% of people here. So first, tougher lending standards. Banks are becoming more cautious, making it harder for businesses to expand and for consumers to make big purchases like, well, electric vehicles, for example. Second, reduced government spending. Fewer contracts, slower infrastructure rollout. This creates a ripple effect through the economy. And then third, strategic messaging. Even Winston, back here, perks up his ears when the Fed speaks. Winston, come on. There he is. Even a few carefully chosen words can send markets tumbling. And fourth, regulatory scrutiny. Increased oversight in certain industries slows down investment and creates uncertainty. And the goal isn't to crash the economy, it's to engineer a soft landing. By temporarily taking some air out of the balloon, they're trying to prevent a much bigger, more painful burst later on. And that's where the opportunity lies for you. If companies like Tesla and NVIDIA are being held back by these artificial constraints rather than fundamental problems, what happens when those constraints are eventually lifted? Now, let's talk about Tesla. Wall Street is fixated on quarterly car deliveries and margin compression with Tesla. They're looking at price cuts in the US and in China, and they're saying Tesla is in trouble. But they're missing the bigger picture completely. Ron Barron points to a fundamental shift that's brewing, something that could make today's concerns look laughably short-sighted. It's the transition from car manufacturer to a robo-taxi operator. Think about the maths for a second. Under the current model, Tesla makes about $6,000 to $7,000 profit per car sold. One transaction, one-time profit, and you might not come and buy another car for, 5 years, 7 years, whatever. That's the old way. But the Robo-Taxi model, we're talking about $30,000 to $50,000 profit per year. Not a one-time sale, but recurring annual revenue. Let that sink in. Every million robo-taxis that Tesla deploys, could generate an additional 30 to 50 billion in annual profit. That's more than many Fortune 500 companies make in total. The key advantage Tesla has isn't just manufacturing capabilities, it's their software. While competitors like Waymo and Cruise are relying on expensive hardware solutions with LiDAR and complex sensors, Tesla's approach is fundamentally different. Their full self-driving system improves with every iteration. It's getting dramatically better with each update, according to Barron. And the beauty of software, it scales infinitely at virtually zero extra cost per extra vehicle on the road. So do you see how this changes everything about Tesla's valuation? Instead of evaluating it as a car company with 15 to 20% margins, all of a sudden you'd need to value it as a software and robotics company with potentially 70 to 80% margin on its robo-taxi fleet. And then there's another factor that Barron keeps emphasizing, the Musk Factor. Despite all of the current madness out there, Barron still thinks having Elon as an incredibly consequential person advising the president suggests a level of influence that could translate into favorable policies. Think about it. Ultimately, who's going to have more say in autonomous vehicle regulations as they develop? And when we combine all of these elements, software advantage, scalable approach, and potential regulatory influence, the current stock price starts to look like an extraordinary opportunity rather than a reflection of Tesla's true prospects. We're going to talk about risks in a moment as well, but let's shift our focus to NVIDIA first. There is this narrative going around that NVIDIA is in trouble because the hyperscalers, the Amazons, the Googles, the Microsofts are developing their own custom AI chips. And look, there is a genuine challenge. When Wall Street thinks your biggest customers start becoming your competitors, that's, well, not ideal, right? But focusing solely on this challenge misses the bigger picture of what NVIDIA is becoming. If we look at the upcoming GTC 2025 event, sort of NVIDIA's annual showcase, we can see they're not playing defense. They're aggressively expanding into new territories. So let me break down 4 key strengths of what most analysts are overlooking here. First, the rising AI tide. Ironically, hyperscalers building their own chips is actually bullish for NVIDIA. It validates that AI is transformative and here to stay, and the market is expanding so rapidly that there is room for multiple players. Second, NVIDIA's software moat. I know we've talked about this a lot of times, but NVIDIA has been building and fortifying its moat long before generative AI comes to public eyes, and that's simply not something competitors can replicate overnight. And then third, customer diversification. Yes, hyperscalers are super important, but NVIDIA serves countless other customers, from research institutions to healthcare companies, financial firms to manufacturing, and their technology powers an incredible diverse ecosystem. And then fourth, and this is the key insight, NVIDIA's vision for the future was set in motion years ago. The GTC merely confirms what is already happening behind the scenes. They're focusing on 3 transformative areas. Robotics. NVIDIA is positioning itself to provide the brains for robots. This is massive as an untapped market. Then we have sovereign AI. Nations want to develop their own AI capabilities without relying on foreign tech. And this represents an entirely new market for NVIDIA. And then third, we have AI agents. These are software entities capable of performing complex tasks completely autonomously. And NVIDIA's platform is ideally suited to power these agents. There will be billions of these. And the proof that this vision has been in motion for years, well, look at their financials. Professional visualization is already up 10% year over year. The automotive and robotics division has grown by a staggering 100%. That's not recent pivoting, that's long-term strategy starting to bear fruit. And let's not forget the Tesla connection. NVIDIA's Drive platform is already significant in autonomous driving. The potential for deeper partnerships with Tesla remains a compelling opportunity, especially as Tesla pursues its Robo-Taxi ambitions. So while everyone is fixated on the hyperscaler challenge, a narrative that's at least 2 years old already, NVIDIA has been quietly expanding the playing field, executing on a vision that they set in motion long ago. And they're not just reacting, they're proactively building the foundation for a future powered by smart machines. So what does it all mean for you as an investor? Well, I believe that Tesla and NVIDIA are currently trading at prices that reflect a deeply pessimistic, short-sighted view of their future. Think of these stocks like coiled springs. The more they're compressed by market pessimism, the more energy they store for an eventual release. And right now, they're being compressed not just by normal market forces, but potentially by an intentional effort to cool the economy. This, of course, is a speculative thesis. There are inherent risks, but it's speculation based on 4 solid pillars. First, the potentially manufactured downturn that Ron Barron suggests. If this is indeed a controlled cooling rather than a fundamental shift, it creates an artificial buying opportunity with a limited window here. And second, Tesla's paradigm shift. We're not valuing a car company anymore, we're valuing a future Robo-Taxi network with the potential for 30 to 50 billion in annual profit for every million vehicles deployed. I haven't even touched upon robots, that's a whole nother story. Third, NVIDIA's continued leadership in a booming AI market. So despite the hyperscaler challenges, they're expanding into robotics, sovereign AI agents, massive new markets where they have a significant advantage. And then fourth, the Musk Factor, the potential for government influence and just getting that permissible autonomous driving federal legislation where you're suddenly now allowed to fall asleep in your car, right? That's going to happen. And who's going to be able to put out the most cars the quickest with full self-driving? Well, it'll only be Tesla. You know, I have a bunch of cats and one of them is pregnant, so there'll be a lot more of them. Have you ever seen a cat just before they start to really jump at something? They sort of coil back and they kind of do a little bit of this with their back feet. And then they leap forward with unexpected energy. The market seems to be in that crouching position right now with these stocks. And this current negativity, I think, is a distraction from the long-term potential. So we're not just betting on next quarter's earnings. We're betting on a future where autonomous vehicles are ubiquitous. AI powers everything from your refrigerator to national defense systems, and Tesla-NVIDIA are at the forefront of the revolution. Now that we understand the thesis, let's get a little bit practical. How exactly should you position yourself to potentially benefit from this opportunity? Let me walk you through some specific strategies for trading Tesla and NVIDIA in this unique market opportunity. So I've opened here tradevision.io, which is the platform that we built to give you a data edge and an information edge, and we've literally just released daily news on all the major stocks. Not only does it tell you the actual news that is like updated like that, but also the key drivers. What's driving these stocks, the key factors, the market sentiment, and everything else. And I think it's super, super useful on top of the many amazingly useful things that we have on here. And what are we seeing? Well, we've had this pretty significant sell-off here, right? Like that's sort of the channel that we're in, not particularly pretty. So that doesn't look too good. So what's actually happening here in the last couple of days? Well, you see that we are selling off with increasing volume. And then just the moment where we started to recover a little bit because Trump bought a Tesla, well, volume is declining. So we're seeing not monstrously strong buying. And I think it's just because the market is still a little bit, well, on the edge of their seat, and it's understandable. So what do we watch out for? Well, one thing you can look at is just how oversold is a stock. And there's a little indicator down here called RSI. And you can look at that and you go, okay, we were at like minus or at 21, that's really oversold. Anything below 30 is really oversold. The last time we were here was in January 2024. And generally speaking, these, let me draw some lines here. Generally speaking, these lows are related to lows in the market right up there, right? So on that theory, this might well be a low. But there is one factor that will apply similarly right now to what we're seeing on NVIDIA as well. And it's something called the VIX. It's the fear index. It tells you how fearful is the market. And basically, it tells you, say a VIX of 30 basically tells you that the market is going to move about 2% up or down in the next 30 days. That's basically the indicator. And right now it's pre-hype. So generally speaking, anything below 20 is kind of sweet, we're good. Anything above 20, 25 gets a little bit concerning. Above 30, people start to panic. So as we're in this elevated phase here still, it's very unlikely that these stocks recover massively that quickly. You're going to want to watch for the VIX to come down a little bit here. Now for NVIDIA, and again, we put a little prediction in here, you know, the price range that the market's predicting. This is based on real data, $106 to $131. So we're kind of seeing in this, you know, not a lot happening here. Tariff uncertainties, the broader tech sector, so yeah, we're kind of seeing that. But then also the Blackwell chips rollout could apparently sold out, may drive a rebound here. So again, really, really useful news items there. And what do you see here? Well, let's have a start with the RSI again and just see, look, when were we at these lows of the RSI? Actually, we haven't been quite this low for a while, but look at the recent lows on that. And you get a little bit of an idea that typically they are somewhat of a recovery indicator when you are at these lows. So NVIDIA literally hasn't gone anywhere since now June 2024, trading at the same levels. And we've had since then 1, 2, 3 quarters of earnings with a massive improvement in profitability per share. So NVIDIA actually is cheaper than it has been for many, many years. Now, is this the moment where we say definitely buy, 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 buy? No, we're below all the moving averages. And you're going to want to understand that point there is something you're going to want to reclaim. Volume isn't doing quite the same things that it's meant to be doing. And I'm rushing a little bit over this because it is explained completely in the masterclass that'll teach you not just when I would be buying NVIDIA and Tesla, and that's not just based on what I learned or what I'm doing, but what 50 years of the most successful traders on Wall Street have been doing, because that's how I learned it. And that will give you the rule book, 3 simple steps that will teach you exactly when we look at buying, exactly when we look at selling, so that we don't become bag holders like, of course, many people are. We bought up here at that 150s and are feeling a little unhappy about that, even worse on Tesla. So if you want to go and learn that, you want to actually make 2025 your summer. So learn when to sow those seeds so you can reap the wonderful rewards in the summer and then in the autumn, because that's obviously when harvest time is. And if you're going to go and do that right now. Go to felixprehn.org/get-free, because I want you to get free, and that means whatever it means to you. Not having to go to work, getting up whenever you want, hanging around with your little hound while you're redecorating your study, all that sort of thing. And Winston says, Winston, any last words from you? Any last final words? I think he says, go and learn those skills. It's a lot more fun once you have them. And I love you for watching. I love you for tuning in. And I wish you all the best. While Wall Street trembles under recession fears and tariff chaos, these two companies' alliance